Good afternoon. The topic which I am going to deliver is principles of commercial bank. There are many principles. The first principle is principles of liquidity. Deposits are repayable on demand or after expiry of a certain period. Every day depositors either deposit or withdraw cash to meet the demand for cash. All commercial banks have to keep certain amount of cash in their custody. The next principle is principle of profitability. The driving force of commercial enterprise have generate profit. So it is true in case of commercial banks also. Principle of solvency. Commercial banks should have financially sound and maintain a capital for running the business. Next principle. Principle of safety. While investing the fund, banks have to be cautious because bank's money is a depositor's money. So whenever the depositor is asking the money, the bank has to settle it. Principle of collection of savings. This is a very important principle for today's banking business. Commercial banks always seek huge amount of ideal money from their clients. Nowadays, banks fix up the target for their employee to generate more savings from the people. The next one is principle of loan and investment policy. The main sources of commercial bank are lending and investing money to the viable projects. So commercial banks always try to earn profit through sound investment. The next one is principle of providing services. A better service brings great reputation for the bank. Principle of solvency. Commercial bank maintains and keeps the client's account secretly. Nobody expects the legitimate person is allowed to see the accounts for the clients. The next one is principle of modernization. It is an age of science and technology. So to cope up with the advanced world, the commercial bank has to adopt modern technical services like online banking, credit card, etc. Principle of specialization. These commercial banks segment their whole functions into various and replace their human resources according to their efficiency. The next one is principle of location. Commercial banks choose a suitable site where the availability of customer is large. The next principle is a principle of relation. Commercial banks always try to maintain a good relation with their clients and potential customers. The next one is principle of publicity. It is an age of publicity. If you would like to earn more money, you have to give more advertisement through various media. In that case, commercial banks follow this kind of their customers. Next, we can see the essentials of the sound banking system. A good bank must have the following features. Adequate liquidity. A bank must keep sufficient cash in hand to meet the claim of depositors, otherwise they would be insolvent. A bank failure not only affects depositors but bank also. People would not keep funds with the banker. It ensures safety of a bank. Unless a bank is safe, it cannot render its social services. Next one is expansion of banking. It facilitates should bring throughout the country economy. It must also cover overall sections of the people, of the funds and also productive activities. The less developed regions should get more banking than others. Thus, a diffusion of banking officers is essential. The next one is investment and loan policies. A sound banking system must have a sound investment policy whereby it can optimize the twin goals of liquidity and profitability. If loan and investment are wrong, a bank suffers loss or face liquidity shortage. A prudent banker should carefully determine the composition and character of its loans and advances so as to optimize earning without endangering safety and solvency. The next one is human factor. Human factor. The soundness of a bank depends much on the quality of a banker. Banking being a practical affair, rigid application of bank laws are not only always fruitful. Much depends on the discretion of men piloting the ship. Sound banking thus depends upon the banking personnel than on banking laws. So, with the help of the banking system, the public people will get advantage, because if there is an excess excess money with them, they can deposit the money into the bank. For depositing the money, the bank will give the interest rate to the public people. The